Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Tuesday, May 3rd, 2011 is brought to you by Realtic. Alright folks, let's get right into the charts today. Take a look at what we're seeing. We're seeing a very quiet market, a little bit on the choppy side, but not quick choppy, more slow choppy. What do I mean by that? Well, you can clearly see here the markets have slowly moved up off a gap down, back to the gap fill right there. That's resistance. You can see this little candle right here. That is your gap fill point of origin, and therefore that would be your resistance. After hitting that right there, the market's then pulled back to the 200. You get below the 200, but never confirm below the 200. Rally back up, take out the 20 moving average briefly, but again, never confirm above the 20 moving average. And this is spectacular for those of you that follow the In the Money Stocks methodology. And again, if you don't know the In the Money Stocks methodology, you can clearly join the free trial at In the Money Stocks. Just go to InTheMoneyStocks.com. But in any case, what you're seeing here is a close above, side, side, side. Never do you confirm above the pivot top right there, which would tell you you have truthfully broken the 20 moving average. Instead, the market ultimately fails, starts to sell again. We go down to a perfect double bottom down here, and then all of a sudden, again, we have another little bottoming tail in play, and the market starts to bounce back. By the way, have you confirmed below the 200 this time? No, you have not. Could you confirm? Technically, yes, you could still confirm, but we'd have to close below the low breakdown low of the candle right here to confirm, and that has not happened yet. All right, volume has disintegrated, as we can clearly see here. Only 64 million traded on the day. I think the markets, you're getting the sense that the markets overall are kind of taking a break. What do I mean by that? Well, last week we had the crazy Federal Reserve press conference. This week we had yesterday Osama bin Laden being reported dead. That was quite a little bit of a gap higher on the markets that ended up failing. In addition, we've hit some key roadblocks. The 137.10 master level that I gave as much as 2 weeks ago to my premium members was hit yesterday on the gap up, and the market sold off. And again, for those of them that knew that and played that, that was an easy shorting opportunity. If you were a member of the Research Center, even a free trial member, you would have had that information as well. So in any case, we have the market just slowly selling off today. The SPY is down 42 cents. Dow is down just half a point. NASDAQ is down 23 points. And the S&P 500 down about 4 points on the day. So a little bit of a negative move today, but not huge. Now, the interesting thing about today, folks, I do sense that we are getting into that lighter volume session where we're waiting for the Friday jobs report. Remember, non farm payrolls will be reported this coming Friday. And that could be very interesting because we've seen a lot of economic news lately that has been very poor. Jobless claims last week, 426,000. That's much, much higher. Remember, that's people filing for unemployment. So you want a lower number. Lower number is better for the economy. Last week, again, 426,000 people filed for unemployment. If you go back a month or two, we had as low as 380,000. So you are inching up in jobless claims, and people have to wonder what's going on there. In addition, GDP, 1.8% is nothing to write home about. And you have to be worried again. It's interesting to me that you have so much stimulus from the Federal Reserve. This QE2 policy stuff is going in all the way through June, so it's not stopping till June. And what's crazy about that here, folks, is that the markets and the economic data are not reflecting that, especially the economic data. Economic data should be much better. If you're pumping a steroid into the arm of a bodybuilder, you should be seeing better results than a little weakling, a little tiny little thing. So again, that begs questioning, has the QE2 policy failed miserably? And what happens when they stop the QE2 policy in June? What's going to happen then to the economy? Are we going to have a spiral back down into recession? And these are all possibilities. Now, the other thing that's interesting today is the dollar. The dollar is lower today, and usually we see the market rallying on a weaker dollar. But here, the UUP on my Realtic chart is clearly to the downside. And again, that's not having any upside potential on the markets. Markets are a little bit on the weaker side. The other key thing that I wanted to discuss today on this Realtic chart of SLV, which is silver. Silver is getting hammered again, folks, down another dollar on the SLV. You're seeing a little bit of a bounce here. If you go to your daily chart, you can clearly see we are piercing the 20 moving average on the daily chart of SLV, which is the silver ETF. I personally cannot be a buyer of this until it hits the 50 moving average. I will be covering that live to my members. If it does do that, I will give them a play-by-play on how to take that trade. And remember, webinar this weekend, that's coming up. Go to In the Money Stocks Education Seminars and Webinars, and you can find that. We're going to be going into some proprietary cycle count stuff, some really hardcore stuff. It's not hard to grasp personally. Like, you don't have to be a MIT grad or any type of brain genius out there, but you just have to know this, and this is what we're here for, folks. Again, to give you the key ins and outs of this data, of our proprietary techniques. You can get that in the webinar this weekend. It's about a 5 to 6 hour course on Saturday, this coming Saturday. All right. Let's see what else we have going on here. Apple Computer is bucking the market today. This is a rare day for Apple. You still have a little in spirit of bullish pattern here on the Apple chart, although again the markets have been very strong until today, and Apple has not been participating, so that is a little bit of a worry. In addition, we are seeing some other factors out there in tech land that are keeping the technology stocks weak. BIDU is getting hammered today, down $7. This is a big drop. In fact, I talked to my Research Center subscribers over the last couple days on picking up puts because BIDU looks so weak, and I gave it to the Research Center subscribers in the nightly video as well, talking about how the chart was dictating a fall was coming. How was the chart dictating? Let's do a little analysis here. Well, here you got into a little bit of a problematic scenario. Here you move up, the next day you gap higher and reverse and close negative. That's bad. Then you have a pause day, a move up day, and again you push higher and close with a red candle. The next day you gap higher, closing down. Granted, it's off the lows, but you're still not able to push through this general range right here. This was the general range that alerted me there was a probable top in BIDU, and you would see a pullback. See how that's working again? And then the next day you sell off, you have a small bounce, pause. This is in spirit of bear flag beginning to form, and then the breakdown today. The signals were there, folks. If you can read the charts, you can make money. That's simple. Okay? So we'll continue to follow that and see how it all trades out. But right now, BIDU falling sharply today. Sina, another internet play in China, getting hammered down over $10 today. This is a beautiful drop here, guys. Absolutely phenomenal drop on Sina, S-I-N-A. Sohu, let's take a look at that, down $8. I mean, these Chinese internet stocks are getting walloped today. And again, you can see Sohu, S-O-H-U, is another one down $8 and change. NetEase is another one that's down $4. Oof. By the way, what type of pattern is that? That's an in spirit of bearish pattern. You should know that that's going to break down. Look at that fall on NetEase today. These were all Chinese internet-related stocks, and they all ran up together. I mean, these things had monstrous gains, but it's time for them to fall back. Everything comes back to earth, folks. Nothing goes up forever. That's something we should all learn. All right. Let me see what else we have here. Solar stocks along with Chevron and Exxon. Anything energy related is weaker today, as the USO is weaker as well, down 30 cents on the USO. By the way, topping tail on the USO yesterday. That does tell me you could have a short-term top on oil right now, and we may be seeing that in play. All right, so just keep that in mind and continue to watch that. Looking across the board here, folks, Chevron down a buck 42 here. Nice fall on Chevron. And that continues to be, I gave out an article about, I think it was about midweek last week. I think it was actually on Thursday of last week, where I discussed how there was no upside in any oil stocks, really. And my hypothesis essentially was, and my statement was, that if oil goes up, oil's in a golden area right here, right around 110 to 115. If oil goes past that 113 to 115 level, the markets are going to sell off. Why? Because oil's getting too pricey, it's hurting the consumer, the consumer's going to stop spending, it's going to hurt the economy. When the markets sell off, chances are oil stocks really won't have much upside to them because the whole market's selling off. If oil falls, then even if the markets are neutral to positive on that oil fall, oil stocks are still selling off. So there's really no upside, in my opinion, on these stocks, and I gave that call out last Thursday right over here, and since then you can see Chevron coming off a beautiful double top right there. Exxon, same thing. Let me punch up Exxon. And right there, you can see a 2-day pullback. So that's been dead on as well. The analysis, guys, is just second to none. Join the Research Center, take the free trial. In the very least, join the chat room. There's also a free trial there. And again, you can join our webinar this weekend. Remember, if you take our webinar this weekend, you get the DVD, our first Strategies Revealed DVD. By the way, the DVD does not cover things in the webinar. They're different. The proprietary techniques are revealed in the webinar, while the key methods and patterns we utilize to trade off of on swing trades and day trades are used in the DVD. So they actually go hand in hand beautifully. And remember, that DVD is for free if you take the webinar this weekend. In addition, if you do not take the webinar, and I strongly encourage you to take it this weekend, the price is going up next month. We're having to raise the price because of the demand out there, and we're giving out way too many secrets in these webinars for them to be priced where they are. So it's going to be at least $100 more expensive, plus no free DVD next month as well when we do the webinar. So it just makes sense to take it this week. If you're going to take it ever, it's this week. Otherwise, you're paying more money. You're not getting a free DVD with all our strategies in it. It makes sense. All right, guys, have a great afternoon, a great evening. Join the Research Center free trial. See you soon.